What's up, guys? Monetary Recap back at it again with another video, and today we'll be doing a general overview on I'll try to be explaining to everyone why I personally think that the S&P is tanking. First of all, I want to introduce, as always, our Discord. It is free for all members. The Discord invite link is in the description. This Discord has a lot of paid bots which can help you get an edge on other traders. You can see some dark flow, you can see some big you can see big call volumes, big put volumes. You can have trade ideas, watch list advice, all the types of things that you watch our videos for. You can also find in our Discord, and you can chat to other fellow traders. You can chat to us. You can chat to high-end traders who've made a lot of money, whose day job is to actually trade and actually make money in the market for themselves to sustain their life a living. But as we go back to the charts and to the S&P, as we can see, we tested 462, which was pretty key. It was the start, actually the top of this candle, this weekly candle in January. So we've kind of created a little channel here from, if we could get ourselves a line. Where is our lines? Excuse me real quick. Excuse me. I'm so not used to this stuff. Sometimes it is extremely hard. Give me a second. So as I was saying, we tested up here at 462, which was a pretty key point because we had tested previously over here at this red candle, and we had now made the green candle, but sadly we were rejected. So we have now plummeted down to 428. But I want to remind everyone that it's not purely about just the charts. Also, the Fed is raising the interest rate increasingly high, and the problem is that everyone loans so much money. You'll find a lot of videos, especially real estate videos, that are saying it was so cheap to loan out money and actually get money from the bank, and that's all great and well when you can pay. But when you can't pay, or you're losing more money to inflation than you can make, you have to make more money now just to beat inflation, and then all this other to repay back the loans. And people valued their assets so high and took out all these mortgages for houses that they know aren't worth that just to get the money. And now when they have to pay up, they're not going to be able to pay up because the interest rate is so high. And then when they start defaulting, the creditors are going to start having to write off losses. And then once the creditors have to write off losses, it'll eventually trickle down into equities and into cryptocurrency, and it'll just be a terrible day all around. So personally, I think that if we don't see some reversal on the Fed, that we could quickly see a tantrum. This is different than the other tantrum we had previously a couple of years back, because inflation is a lot higher. We are at 1980s inflation, and that is not what was happening in the 2000s when we actually finished out green, when we kind of had the same scenario. So people are really holding on for dear life. Sell volume was at almost record highs, for this year. It was pretty high. We haven't seen that in a while, especially not in this market, for about almost an entire month. So it's pretty volatile right now, and this is the S&P 500, so other stocks are really hurting. And so what I think could happen is, if we don't hold this 428, 412 is obviously on the horizon. Personally, I would be very weary about entering any calls right now, unless you're trying to profit off volatility. Volatility, I think, is the only given right now, and possible downside. So maybe selling calls, if you could squeeze out premium for maybe might be a little risky, but you could try to squeeze out some premium for maybe May and sell some calls at 460. That might give you some more premium, because people would be pretty optimistic, and I think it's going to take us a lot longer to get up to 480 ever again. We were going on a serious trajectory upwards from March 2020, and that is something that I don't think a lot of people were taking into account. We've printed so much money, and earnings have gone up exponentially. Like 10% used to be a lot on earnings increase. Now it's 40 year over year, month over month is so common nowadays. It's like, how long is that sustainable? It's not very sustainable. Just like how they said inflation was transitionary, wasn't transitionary. Okay, so personally, I think that earnings are gonna, when they start coming out again, it's gonna be hard to beat the expectations, especially if you've had a blowout already. Tesla is primed to to constantly beat earnings. That's understandable. AMD, that's understandable. But all these other companies that, you know, have tried to follow with the trend just so they don't, you know, lag behind and are having good earnings, eventually those earnings are going to slow down. And when those earnings slow down and people don't see future growth, look at Netflix. Netflix took an absolutely beating, like a redheaded stepchild. Netflix got beat. It got took to the market and rinsed. I mean, it is down 70%. We were talking about. It is insane. I don't even know what personally to do with Netflix. I'm so glad I didn't enter any of this. I personally, like I said in the other previous video, you can check out also on our channel about Netflix. Me and my mom are subscribers of Netflix. And personally, the content isn't that good. I was realizing today that Amazon Prime is a much better service because it has so many good new shows. It has shows that are from 2022, and that's not really common on Netflix. Netflix, you'll get a show like every other month, which, you know, when you're paying what, 15 and they want you to pay 20 almost now, I mean, that's a lot, you know. And Netflix has never seen this much volume in this entire year. I mean, like, you have to go back months, absolutely months, to see this type of volume. Netflix hasn't had this in years. I mean, I don't know how to more exclamate this. I mean, Netflix is on serious discount. It hasn't been there in a decade. I mean, this is crazy. So, I mean, if you're very bullish on Netflix, all power to you. You know, if this turns out to be an amazing dip buy and no one bought it, you know, full on us, you know, we're the fools here. But, you know, I have absolutely no idea what is going to happen with Netflix because the market is not very happy with Netflix, and seeing the subscriber growth go down is just crazy. That's fundamentals changing right there, people, and that is a key reason to get out of a stock. So going back to the SPY, actually, let's take a look at gold because I'm pretty sure gold is running, and that could also explain to us why the S&P is taking a beating. Yes, look. Okay, so if we find another example here, gold made an all-time high in March, and we were en route to make a new all-time high in April, but we've sold off a little bit to 180. If we go into the daily, we can see we are making a higher low, which, as we've mentioned on Hex, is very important. 178, 180. We touched 185, which we filled a lot of gaps here, and this is pretty key. I mean, it was going up on red days. This is wild. On a red daily, it was going up. That is wild. You would expect these to be green, right? Because they're going up like these, but nope. This is wild, you know. This is also another reason why I personally think SPY could be losing some of its momentum, because money goes where it's most safe haven. You know, government bonds may be terrible that you have to wait for so long, but, you know, 10% is 10%, and, you know, it may not be beating inflation right now, but, you know, I'd rather own a house sometimes than some of these stocks. And another stock that's just been absolutely beaten is Zoom. You know, Zoom is also a COVID stock. Not that I necessarily think Netflix was a COVID stock. Netflix had other issues, but Zoom's fundamentals changed massively when COVID started to taper. Okay, Zoom is going to forever, I think, going to lose its market share because it relied too heavily on COVID. I mean, this is just pretty fundamental. It's not going to go anywhere because COVID's going down the toilet, and so Zoom is going to follow it. And each earnings, I mean, it's not the worst thing in the world, but it's flatlined. What money are you making if no one's using your video streaming platform? Because people are going outside. People are going to the doctor's office. I mean, personally, I just do it over the phone. No one uses Zoom. Zoom is so, like, dinosaur technology. I think people use Slack. They use Google Meetings. They FaceTime. FaceTime is like Zoom. If Zoom is like IBM and FaceTime is Apple. That's the best way I can put it, and I think Zoom is a good short. But this has been Monetary Recap, guys. I hope you enjoyed the video. This has been Jake. Make sure you check out our Discord, like, comment, and subscribe, and peace out, boys.